Hey Money Movers, welcome back to Millennial Money Moves with Nadia. Today we are going to be talking about kind of what's been going on with the market lately. And since it's been kind of volatile, I wanted to give you guys this tool that helps kind of protect yourself against that. It's called a trailing stop loss. And I'm going to go into detail about it. I have some videos and things set up to kind of really help break it down, because if I just sat here and said it, it would get kind of confusing. So bear with me as I try to explain it. And before we get started, please don't forget to like, subscribe, and turn on that notification bell. Stay tuned.
So Nadia, what's up?
We making money moves.
Who making money moves?
We making money moves.
You making money moves?
We making money moves.
We making money moves.
We making money. Welcome back, you guys. Like I was saying, I'm going to talk about kind of what's been going on with the market lately. You know, I was watching the news this morning and they were talking about how a lot of things going on in the market, both nationally and internationally, especially internationally, are going to affect the market depending on how they handle COVID. And it's important to pay attention to these things. Now, I pay a lot of attention to what's happening in China. And you guys know they've really started cracking down on what people can trade and their investing rules. And because I'm invested in NIO, this is why I pay extra close attention, because I want to see what China is doing with their market. I know it's a little harder to find this news because it's not going to be talked about as much on our news networks, but I do go out of my way to research this. I'll probably be doing another NIO update sometime soon because I'm pretty bullish on this one. I really like it. And like I said, what's happening in China can really affect stocks in the Chinese market. So make sure you're keeping an eye out on that if you are invested in any Chinese companies, not just NIO. But as you guys know, the market's been super crazy lately. You don't really need me to tell you that. You can see it. It's been talked about everywhere. Now, the Dow did look good today, this morning, but you know, that's always subject to change. As we've seen, there's been a lot of up and downs. And I thought this would be a good time to really give you some more tips on how to protect yourself if a market crash is coming, and if you're in a market correction, and just in general, when there's a lot of volatility, there's something called a trailing stop loss that I felt would be super useful to you guys. So, a trailing stop. Now, the definition, or I guess the goal, is this is created to lock in your profits and limit your losses, a trailing stop loss. So we're going to talk about trailing stop losses as percentages. It can be in dollar amounts or percentages, but we're going to talk about it in percentages today. Now let me show you how you would set your trailing stop loss. Now I just signed into my Fidelity, and the first thing you're going to do is click sell. I just clicked on ChargePoint. I don't have a lot of individual stocks in my Fidelity. This is mostly where I hold my mutual funds, ETFs, Roth IRA, bigger things like that. So that's why you're only seeing I have 2 shares of ChargePoint on here. Most of that is on Webull. But I'm going to walk you through the process of setting a trailing stop loss. Okay, so the first thing you're going to do is you're going to click on your individual stock, and then you're going to click sell if you're going to sell. Now, you want to go to where it says action and make sure it's selected sell. For quantity, you can put let's just say 1 share. This is just an example. I'm not actually going to sell this. Now for order type, you can go ahead, and this is where you put trailing stop loss percentage. For the trail amount, I like to do 10%. I'll explain why later. And time and day, time and force, I'm going to do good till canceled. And this gives you about another year out. So it's January 14th, 2022. We're going to leave it like that. Leave it, and then just click preview order. And then you would go through the steps as followed. It'll give you a preview, and you just click OK. I'm not going to do it because I'm not putting a trailing stop loss on this one. So I'm just going to exit out, but that would be how you do it. And I hope that made sense. It's definitely a difficult concept to explain, but that's how you set your trailing stop loss in percentage. Now, the reason I chose 10% was because I think you don't want to go too low or you don't want to go too high. If I had chosen something with 5 to 8%, then I would not be giving myself, those margins are too tight. And I'm going to give you guys another example of what I mean by that. And you don't want it to be about 15 to 20% because that could cost you more money. You could be losing more money that way. So let me show you one more video that I think will kind of help, make this all make sense. Okay. I have some pen and paper notes here. See me looking down, that's what I'm looking at. So let's say you make an initial investment of, I'm just going to make up a stock. I really like donuts, so let's say Nadia's Donut Shop. So you buy one share of Nadia's Donut Shop at $30. That's your initial investment. So let's say the stock goes up. Now in reality, it probably will not just go straight up like I drew it here, but for the sake of this diagram, we're going to say it goes up. And the peak is $60. And then it gets to 60, and then it starts dropping. Now what the trailing stop loss does is it follows the stock price. It follows that up and down. So if it got to $60 and then started dropping, that trailing stop loss is going to say, oh, $60 was the peak. The trailing stop loss is following it. So it would sell at $54. Now let me explain this again, how I know it would sell at $54 and all of that. It would sell at $54 because that's 10% of the $60 peak. You get me? So remember, we put our trailing stop loss percentage at 10%. So again, you invest initially at $30. Stock could go up, could go down, up, and it gets all the way up to $60. And then it starts dropping again, dropping. If it kept going down, it will sell at that $54 because that's 10% of the peak. I hope that made sense. I'm trying to explain this as simple as I can. This is a kind of difficult concept to understand if you haven't done one, but I'm hoping that this diagram and me explaining it kind of helps break it down. Now there's another example of this is how you would make a profit, but let's say you unfortunately took a loss. So let's say you invest $30 in Nadia's Donuts, just one share, and it starts dropping. It's going to sell it at $27 because that's a 10% loss. So 10% of that $30 would be $27. So it would sell at $27. And this way you're protected. You only lost $3. Now let me explain what I meant by margins and why I picked 10%. Let's say we had done a 20% margin. You would have lost a lot more money because it wouldn't have sold off until it dipped down even more. Or let's say you had made a 5% trailing stop loss. Yes, it would have kept dipping, but it would have sold at $28.50. So let's say it dropped 5%, but then it went back up and then it started going up to 60. If you sell it with just a 5% loss, you're not really giving yourself a chance, or you're not really giving the stock a chance to correct itself, right? That's a really low margin decrease. 5% is too tight. So, for example, again, if your margin is at 10% and it starts dipping, if it was $30 and then it went down to, let's say, $29, and then it went back up, because your margin is 10%, it's not going to sell it at 27 because there was still time. Maybe it dropped down 5%, but then still maybe it went back up and you got that 10% increase of your initial investment. That's what the trailing stop loss does, right? It's following the price of the stock. It's following that up and down. And this is how, remember, you lock in your profits and you limit your losses. Now, I really hope that made sense. I know it's kind of a lot to explain, lots of ups and downs and examples here, but I really want to help my new investors. And this is such a concept that I think is so helpful. Ignore my little rough whiteboard sketch. It's all I had to work with here, but I hope it helped you guys with kind of seeing what the trailing stop loss does, how it can help you make more money and how it can stop you from losing money. And especially One benefit about the trailing stop loss is you don't have to be watching it as closely. Let's say you have a busy day, you're in meetings. Not everyone just trades. People have 9 to 5s. So you might not necessarily be able to watch the price go up and down. A trailing stop loss is a great option if you are walking away and you need to put in and you need to sell at a certain point, and you want to make sure that you're not losing more than 10% of your initial investment. This is kind of a thing that protects investors who are managing their own accounts. And I always say make sure you're checking your portfolio, making sure it's diversified, buying on the dips. And a trailing stop loss is another huge tip that has really helped me along the way. Like I said, I didn't actually put a trailing stop loss on ChargePoint, but that was just an example to kind of walk you guys through the process. I really, really hope this video helped you guys out. I'm a big fan of this method. There's a video on my channel about it where Uncle Larry kind of talked about it, but this is me kind of, there's lots of new people who probably haven't seen that video yet. So I just want to make sure the information is as broken down as possible and helpful to those of you who are just starting, because I know, I get it, it can be so much when you're starting to invest. And with the volatility we're seeing in the market right now, I think it's especially important to know stuff like this. So again, please don't forget to like, subscribe, and turn on that notification bell. And remember, we're making money moves. Have a good day. Bye.